There have been many developments in a relatively short time. Bitcoin's price exploded to a 3-month high in the past 7 days alone, reaching levels we hadn't seen since January. Hey everyone, welcome back to Crypto A1, where you subscribe for videos demystifying cryptocurrencies. Bitcoin and crypto never sleep, and neither do we. I want to answer one big crypto question during today's video. Why is Bitcoin pumping? What are the reasons? Let's look at 3 potential reasons for the recent gains. But before we get going, be sure to like this video if you haven't already, as it really does help out the channel a lot. And subscribe with notifications on for more crypto-related videos like this one. Now, let's get started. The first point is that we are witnessing a natural accumulation among major players in this space. With their continued BTC purchases, Do Kwon's Terra seems to be the primary driver behind the recent rise in Bitcoin prices. According to an earlier report from Crypto Potato, Terraform Labs, the company behind the Terra protocol, announced plans to purchase over $10 billion worth of Bitcoin in the coming years. Although many didn't take this seriously, Kwon also said they have $3 billion ready to fund this reserve. It didn't take long before Bitcoin buys started rolling in. Several analysts believe there is an impending supply shock as Terra has been buying in batches of $125 million. As of March 27th, Terra Luna's Bitcoin reserve wallet held $1.1 billion in Bitcoin, belonging to the stable reserve coin. Just the following day, on March 28, Terra Luna purchased an additional 2,830 Bitcoin valued at $133.6 million. Natural accumulations occurs just like that, and those are only the entities making announcements. Imagine if someone just bought it without announcing it. Again, for number 1, we have accumulation. The second reason has to do with the liquidation of shorts. The total market cap for all cryptocurrencies has risen past $2.1 trillion, with Bitcoin breaking out of a week of stale price action. With the surge in Bitcoin prices, the leading cryptocurrency has crossed the $47,000 mark, a price it hasn't seen since the beginning of the year. The crypto market rally has also led to millions of dollars being liquidated in short positions as Bitcoin's price has broken even for the year. Data pulled from CoinGlass, an aggregator that gathers liquidation data across the market, shows that more than $142 million in Bitcoin shorts have been liquidated since March 27th. The reason for the spike is the massive amount of shorts that were liquidated on exchanges while they were growing. So, that is the second reason why the cryptocurrency market is pumping. Lastly, the overall market sentiment turned positive. The Bitcoin market, and all other cryptocurrency markets in general, remain closely linked to Wall Street, despite efforts by native proponents to detach. Some of the major indices in the US have been trading in the green for the past 5 days, including the S&P 500, Nasdaq, and Dow Jones Industrial Average. In addition, tech companies such as Tesla are now achieving significant growth. The TSLA stock has been up for the 9th consecutive day, climbing by an astounding 35% in the same period. Investors might be more likely to take on a risk-on trade, and Bitcoin fits this definition. Overall, it's vital to keep a close eye on the price, especially since it's hovering around the yearly close, and it didn't come through last time, although it came pretty close. This pump also relates to some of the fundamental news stories that are happening in this space that I would like to share with you today, so be sure to watch this video till the end. The CEO of Grayscale, Michael Sonnenshein, shares his thoughts on why the Bitcoin price is surging. According to Michael, it has been a challenging start to the year, not only for crypto but across all asset classes. He believes it's an exhilarating moment in the crypto community to see that losses have been erased so far and that Bitcoin has broken above this psychological level of $45,000. There appear to be a couple of native crypto buyers like Terra buying for their own reserves. we're also observing some all-time open interest in the CME futures, leading to a short squeeze in the futures and thus a pump in Bitcoin prices. From our vantage point, it's encouraging to see the traditional players getting involved in crypto trading. Some new firms such as Cohen and others are now trading crypto and offering cryptocurrency custody services. From an investor standpoint, there's no doubt that crypto is a class of assets that will endure for a long time to come. Consequently, all the firms they work with for advisory or custodial services are beginning to offer crypto-related products and services. This also makes the asset class more popular and increases investor interest in diversifying into it. The question is, if there is so much demand for Bitcoin, why is GBTC, a grayscale Bitcoin trust, still trading at such a discount? According to Michael, GBTC's conversion to a spot ETF could happen eventually. The discount will return to normal if it does, and there will be a great buying opportunity. Now, I have some news regarding Ethereum. A record number of people are searching for Ethereum merge on Google. When you are browsing the web at work, occasionally checking cryptocurrency prices between social media breaks, did the words Ethereum merge suddenly pop up everywhere? Don't worry, you're not alone. According to Google Trends data, people worldwide have been so eager to find out more about the Ethereum merge in the last fortnight that the search term has peaked in popularity everywhere at once. On March 6, Ethereum merge was about 21% as popular as it is now. The term reached its all-time peak popularity by March 20, thanks to an explosion in searches after that date. The Google Trends report for related search terms includes proof of stake, Ethereum merge date, and Ethereum 2.0 release date. This isn't surprising, given that all of these topics are deeply connected, though the merge may seem like the next step in mankind's journey to the singularity. It is really not that scary. You can think of it as the next step in Ethereum 2.0, which was recently rebranded as the consensus layer. Ethereum currently uses the same proof-of-work consensus mechanism as Bitcoin, so Ethereum miners with the most computing power are the ones who validate the most transactions on the blockchain and earn reward coins. Ethereum's main net will switch to a proof-of-stake or POS system known as the Beacon Chain as part of the merge. From then, Ethereum validators will be able to validate more transactions based on how much cryptocurrency they stake. Miners can no longer partake in this network. Ethereum's well-known scalability issues should also be resolved by 2.0, according to the Ethereum Foundation. The network currently handles about 30 TPS or transactions per second, but that number is expected to rise to 100,000 following the merge. Better scalability will also lower the network's expensive gas fees. The Ethereum Foundation claims that this mechanism will also reduce the network's energy consumption by 99.95%. This will be a significant milestone in crypto history. We will keep you updated. Next, we have news for altcoin holders. Polygon launches mobile burning and token lists. As promised in a teaser tweet, Polygon has launched 2 new features for its platform: mobile burning capabilities for Matic tokens and a new Polygon token list service. Polygon says the new features for its wallet suite were influenced by feedback and suggestions from its community. You asked for it, and now you have it. But what does this mean to you as a Matic holder? Well, first of all, Matic burns, just like Ethereum has EIP 1559. This means every time a transaction occurs, a little bit of Ethereum is burned, just as in this case, a little bit of Matic is burned every time. Obviously, that has already been done, but the Matic Burn console for its mobile app just makes it easier for individual users to use and experience the platform. The Matic Burn console launched a couple of weeks ago, and now it is available for Polygon's mobile wallets. The console features a new interface that provides a seamless and intuitive experience for its users. Burning Matic tokens is an amazing way to help contribute to the Matic ecosystem. According to our estimates, we may burn around 0.27% of total supply per year, says Polygon. Polygon's Matic token features deflationary characteristics, which will lead to more burning for more tokens and maintain the ecosystem's equilibrium. It will also result in better gas predictions, since token burns and smart contracts are in place to ensure that prices do not rise above a certain viable level. Polygon states that validators and delegators will also receive better offerings due to the deflationary character of Matic, which means that tokens offered to them will accrue more value over time. The Polygon token lists now allow Polygon users to research investment opportunities with legitimate tokens. At the same time, they provide token creators with a platform where they can appear in front of the crypto market they are aiming to reach. Users simply need to use Polygon Bridge and click on the Manage Token Lists option and select the tokens they want. Polygon has previously explained in great detail how EIP 1559 also introduced the burning function for Matic tokens. Polygon has also demonstrated how Polygon Hermes and Polygon Mitid will boost the scalability of its protocol. These most recent updates to Polygon also allow its users to see their deposits and withdrawals on the Polygon Bridge, which ranks the third most widely used decentralized application on the Ethereum blockchain. That's it for today. If you're still here, I bet you enjoyed the video. Give it a thumbs up and don't forget to subscribe if you haven't already. We'll regularly post finance videos to help you grow abundantly, so stay tuned. We'll see you in the next one.